Hey, good afternoon, everyone. Sam here, kicking off the state of the market for July 20th, 2020. So I'm not entirely sure if we're connected or not, so let me know if you can hear me, and we'll go ahead and get started here. Okay. All right, thank you, Tim and Sabrina. Could you guys just confirm that you guys have video and sound, and we'll go ahead and get started? It looks like we're okay, but I just want to confirm that. Okay. Sweet. Thank you very much. Awesome. Good stuff. All right. So we're going to be doing a state of the market today. A lot of this stuff, if you're in the gold room, you're going to have seen this. What we do in the gold room for my session. So if you're a member of Simpler Trading, for the Monday opens, I am the one that covers the Monday open, and I'll typically do what I call the story of the week. So let me actually start by showing you that, and then we'll go into what's going on with the markets, where I see things going next, and places to focus and trade. So this is what most people will see when they're a member of the options gold room every Monday. And I think this has been doing a pretty good job of kind of orienting the week. So just real quick, let's just kind of go over this. So I call it the story of the week. I post this every Monday before the trading begins. So right around 8:15 or so. And the first thing to note here is just we're in the middle of earnings season. It kicks off really this week. It kicked off last week, but in reality, the next 2 weeks are really the big ones. So be aware of that. There is earnings coming up. And then just a couple of points here that I think are helpful for the market. Now, if you guys are familiar with my stuff, if you watched the last state of the market that we did, or if you've just watched any of my stuff, period, you'll understand how I like to look at other markets that are very important to then understand what's going to happen in our markets. So, for example, here, the dollar, right? The dollar's been really in focus, even if you never trade the dollar, right? And I rarely ever trade the dollar myself. It's important to know what's going on with it because a lower dollar is bullish for the market, right? And so one of the main points here was that the dollar closed below the 200-week simple moving average last Friday, which is very big. That is a very key level of support, and it's broken into the downside. Not only did it break the 200 weekly, but then it also has squeezes, and it's developing a daily downtrend. Right, so what's bearish for the dollar, and all this stuff is bearish for the dollar, is actually bullish for equities. The next thing we actually covered in the last state of the market that I did with y'all, and it was the Aussie dollar, right? So what you want, if you're bullish for the market, you want the dollar going lower, and you want the Aussie dollar inversely going higher, right? And that's a very bullish orientation. Another main point here that I talked about is the VIX. Now, notice that we've done all this work and we haven't even discussed the indexes or a stock yet, right? So we're understanding the world around us. We're all in a dark room, and we need to understand what our surroundings are before we can really take action. And that's really what this is all about. And in my opinion, it's extremely helpful. So the VIX here closed below the 200-day simple last week, which is bullish. It's very bullish, actually. But then VVIX, which is kind of in the weeds, is showing us some potential for change. So we do need to watch that. HYG here is just high yield bonds. Again, nothing major that you really need to know. Just this needs to be above 82 or 83. As long as HYG is above 82 to 83, the market will not go down. It will not go down as long as HYG is above 82 and 83. The transports are starting to shape up. Sectors to watch this week were semiconductors, and I'm going to talk about these with you guys here in just a second, but there were semiconductors, cloud was a big one, emerging markets, anything short dollar, biotech is a huge one, which is why it's in caps, healthcare, and miners. Okay, so check this out right here. This is pretty much the comment of the day and hopefully would have made your day. I know it made mine. So The Fang Index. This is an index that I made myself. It is a index comprised of all of the companies that move markets. I don't, the S&P has 500 companies total, and probably out of those 500, I care about 20 of them. So what do we do with the other 480? Right? They're kind of useless. So what I did was I just threw them away, and I made my own index. And look what this says. And keep in mind we saw it happen in spades today, but this we posted this before the market opened. The Fang Index, as of last Friday, mind you, implied a rotation back to momentum. And that was so important today, right? If you were still trading like the modality of last week, you missed a big move. All the move went back to momentum, and the Fang Index let us know that. And then I'll just skip the rest of this stuff here. So this is the big one here, the rotation back to momentum, which was what we're going to focus on. So let me make some time to answer any questions. Last time I did this, I let questions get away from me a little bit. Okay, looks like we're all good on video and sound. Very good stuff. All right, very good. So state of the market here, and feel free to throw some questions at me if you wish. I'm just going to try to keep it big picture for you guys and kind of just show you what I'm looking at, what I'm trading, and go from there. So I'm going to show you SPY here. And how many of you guys like Fibonacci? Either retracements or Fibonacci symmetry. I'll just pretend all of you said yes. So check this out. If you run symmetry, right? Symmetry is the one with 3 points. From this major low, and it was a major low, to this major high, and it was a major high, to this major low, which is a major low as well, it should look like this when you connect the points. It gives you a 100% target at 323.50. This is a big level, guys. When you have symmetry of this size and this magnitude, this is weekly long-term major symmetry right here. See it? 100%. So look what happens the first test. You see literally the perfect test of that level, and then you pull back. All right, so you hit the level, you pull back, you get a small jump, you pull back again. Here's the key. You see the higher low? That's the key. Made a higher low, and then it goes and attacks this level. Write this down. You should know this level. 323.5. So you see how now we've breached above it, and we're actually trading above it now. That's really strong, guys. Basically, if this market was going to roll over and die, this symmetry right here would be killing it. This is a huge level, and it's getting through. Not only is it getting through, but you have a daily squeeze that continues to fire to the upside. Your momentum looks good across the board, especially on the weekly. You have a 195-minute, which is set to fire to the upside, which is just crazy. And then you have a 130 that's set to fire, right? So the main thing is to understand is this is a key level, 323.5. Understand just how I cannot come up with an adjective for how big this level should be. And for us to be breaching above it is a key indicator. Not only are we breaching above it, but you have setup here, which then makes a setup here, which then triggers this setup. So it's set up to continue in a big way. So that's the SPY. The main takeaway from there is just 323.5 is a big level, and you have momentum to get through it. Let me show you this one here. Again, I'm going to show it to you, but this isn't something I trade, and it's not something I would even recommend you trade, right? It's just, this is such an important thing to understand that that even if you don't trade it, it's well worth your time. And you don't really have to do any work, right? I've done all the work for you. All you have to do is just make sure that this stays above 83. So here you have high yield bonds. Now, why am I showing you this, right? Who cares? Let's go trade Tesla. And that's fair, but you'll have a much easier time trading anything, including Tesla, if you understand what this chart means. So as long as this chart is able to keep going higher, the market will not fall. Regardless of whatever indicator you have or whatever timing signal you think you have, the market's not going to fall with this chart above 83. So I'm going to leave you this level here, and I'm going to talk about it for just a little bit as to why. Because not a lot of folks seem to understand this. So above 83, that's really just your over-under. Above that level, don't short. stay long, and then below that level would be a yellow light. Why is this so important? Because so think about it this way. We all are focused on things like Amazon and Apple and Google and Netflix and all that stuff, Tesla. But none of those things are really leading indicators, right? The leading indicators are really going to come from the credit markets. It has to. The credit market is just infinitely bigger than the stock market, right? As big as Amazon is, or as big as Apple is, they're all irrelevant in the face of the credit market. So by understanding the credit market, even if it's just above 83, below 83, right? That's really all you need to know for this conversation. You'll be much better off. So the reason this chart's so important is because the way the credit market works, think about it like an iceberg, right? This is the way that I described it in the room. So you have the tip of the iceberg here, and it's HYG. And that's what you can see, right? I'm looking at it now. You could pull this up on your own end and see the same thing. Underneath it, however, and my icebergs tend to look like pyramids, underneath what is visible, if this was the water, then you have the entire credit market underneath this. And you can't really see it, right? Unless you have a Bloomberg, or you're just really deep into the derivatives markets. You really don't see this. This is all this in here is hidden from you. The thing is, this is the most important thing on the planet. There's nothing more important than this. And as such, because this is the visible part, HYG, of the most important market in the world, the credit market, then understanding that above 83, everything is okay. Below 83, that's a yellow light. And it really is no more complex than that. I could make it more complex, but really you don't need to know more than that. So there's that one. Let me just go ahead and jump into what I'm trading here, because that's what I think you guys want to see, right? Nobody cares about my big picture stuff, it seems. I joke. I'm sure some of you do. But you guys want the trade. So let's talk about the trade. So one thing that I'm really focused on this week is going to be semiconductors. And frankly, let me just ruin it for you. My watch list is what I'm trading, basically. So I'm really focused on biotech, cloud. Where did I write cloud? Right here. Healthcare, and that's pretty much it. And semiconductors, actually. Excuse me, semis. So cloud, semis, biotech, and healthcare. That's my focus this particular week. So let's go back to the market here. I'm going to show you SOX, which is the ETF or the index for semiconductors. I watch this more importantly than I do any individual semi, because if this moves, all the semis will move. And does anyone see the setup here right away? Hopefully you do. So here's the setup here on the semis. And keep in mind, I'll show you which ones I'm trading, and I don't mean to sound flippant, but when it looks like this, just throw a dart. You'd have a hard time missing with a market like this. But here's the setup. You have trend, and I define trend by holding the 21 on a closing basis, right? So kind of intermediate trend. You see it there? So it is holding the 21. That's the first thing I check for. You see how the daily squeeze is already fired long? That's okay. You're near an all-time high as well. Here's your all-time high. So you have a squeeze that's firing, you have trend, you have good momentum, and look inside. If you go one step lower into the 195, which is 2 bars per day as opposed to just one, you see the squeeze here with an upward bias? Pretty strong, right? So what do we end up with? Well, we end up with something that's near an all-time high, with trend, with momentum, and a squeeze underneath it. Not only do you have a 195, but you have a fresh 130. You see how the 130 there went from red to gray? That's a trigger. So it's already triggering. So that one's already triggered. That should trigger this one, and that should push this one, which is already in motion. So the semis are definitely in play here. Well, actually I did a few things in the semis, so I'll just share them with you. So one trade that I sent out today was LRCX. We got into this one before it popped above 50, and This is just another one of those semis that I think plays very well. If you're going to get into a semi, I think it should look very similar to the SOX ETF, which I just showed you. And you'll see this one once I pull it up, it does. So what did we have on the SOX? Well, we had near an all-time high, trend, and 130-minute and 195-minute squeezes. So anything that we buy must look like that. If it doesn't look like that, look elsewhere. And so let's just quickly compare this one. So near an all-time high, right? This is the all-time high today. So that's a check. Is it holding the 21? That's a check. Does it have a trend? It does. Does it have good momentum? It does. Do you have a 195-minute squeeze? You do. Do you have a 130-minute squeeze? You do. Right? So you see how this is a good proxy for the SOX? So we got into this one today in the room. Another one that I posted in chat, but I didn't send out as an alert in the room, but we bought today as well, is Corvo, CRVO. So another semi-play here, and you'll see the similarities right away, right? This isn't, we're not rocket scientists here. If this ever loads. Okay, there it goes. So all we're looking for is just something that matches with the big thing that we want to match to, right? So for just to put everybody on the same page, I like semiconductors based on everything that I showed you coming into the week. Because I like semiconductors, I then look at the semiconductor ETF or the semiconductor index. I look at the SOX, SOX. A lot of people like the SMH. I prefer the SOX. Same thing, basically. Once you've established what the ETF looks like, basically the sector, then it's on to find the stocks that match that. If you see a stock that doesn't look as good as the sector or the ETF, throw it away. Shouldn't even be in your analysis. So let's just quickly look at this one. This is another one I bought today in the room. So here you see how it's not really holding the 21. I'm giving this one a little bit of leeway, right? I am giving a little leeway because it does have a little bit more of a consolidation triangle here, and so that makes it a little bit more difficult to actually hold the EMAs. But what I'm looking for is for something that's near an all-time high with a squeeze with good momentum, 195 and 130. And you see how these two, 195 and 130, they're magenta. Basically, what that tells you is just a high compression squeeze. So it's a squeeze, but it's a lot. Technically, it would be a stronger squeeze. So on QRVO here, I'm looking for a test back to the highs above 119, and I'm actually looking for a new all-time high. So I think my target on this one is 123. So I think it gets it. It has a good squeeze, good 195, good 130. And then another one that I've been in with the room here, and this will round out the semiconductors, is AMD. So AMD again, just this is going to sound like a broken record, but hopefully it comes across as to why. I'm looking for things near all-time highs with squeezes that can take them above their all-time high, right? And once we pull up AMD here, you'll see the pattern. It's been a consolidation for a really long time. AMD has one of the stronger consolidations because it's all the way out to a weekly. So if my charts can cooperate, I'll show you. So on AMD here, and keep in mind, these are three flavors of the same thing. You really could go 3 times big on one, or you could buy all three, or if you don't like the idea, you don't have to buy anything. But AMD here, near the all-time high, daily squeeze, solid momentum profile, 195, 130. This one has something the other ones don't, and it has a weekly squeeze, which means that the move is going to last longer in AMD once it actually happens. So these are just 3 semis that I'm in with the room, and we got them all from having our notes and having preparation. So next up is going to be Biotech. So I think Biotech here is completely in play, and it's just a matter of how you choose to play it. Again, I'm going to tell you the same thing. I'm looking for something that's near an all-time high, although not necessary in this case, but this one happens to be an all-time high. And I'm looking for squeezes and trend. right? So with biotech here, probably the best way for most people to play it, unless you really know your stuff, is going to be through IBB, which is the ETF for biotech. And you see here how it has daily trend, the 8, 21, 50, everything's aligned there. You see how you have alignment over here on the weekly? 8, 21, 50, 100, 200. That's what you should want. You know, in a good market, there's no reason to settle for less. And here, you're making a new all-time high on biotech, and you have another squeeze here, right? So you have a daily squeeze, which is triggering. You have a 195-minute squeeze, which is triggering. And then you have a 130-minute squeeze, which is triggered. So this is the basis of the idea, is the sector, right? I'm looking at the ocean before I look at the boats, and I think that's really important. I think a lot of people, especially new people, just want to jump into a boat without understanding the ocean, and they really should understand the ocean first. So we didn't actually buy any IBB, but we did buy some things that are inside of it. So inside the IBB, just like it's like a basket, is things like ILMN. So this we actually bought today, and this one plays pretty nicely. It plays pretty nicely because it's in the ETF that I want to buy, and it has an equally, if not stronger, setup. So on ILMN here, I am looking for this to get into the next target, which is at 430. And this is just a good play on biotech as a whole. It's one of the larger components in the IBB, and I think it gets to about 430 here, which would be the next target. Here's your daily squeeze. Your 195 is triggered. You breach the highs. You should be able to get this on a pullback, right? It is 3 ATR up on the daily, so it is really hot. And if you can get this on a pullback anywhere back down to the moving averages, I would be a continued buyer here. So that was that one. There's quite a few of these actually in the biotech space. I won't go through all of them. I'll just give you like another one. REGN. I don't have a position here, but you'll see it's the same thing. It looks just like the one I just showed you that I do have a position, and then another one would be something like IDXX. So, and you'll notice all of these look the same. So, basically throw a dart at biotech. That might be about it. I mean, I really don't have much else for you guys. I think the things that we posted over here are going to be the things that keep working. So, we started the session by showing you what was that level on SPY again? Anyone remember? The big pivot where everything either works or doesn't work. Let me actually wait and see if anybody if anybody remembers the level. What's the level on SPY that needs to hold? There you go, Tim. You got it. You got it, Tim. 323.5. So I'll leave you with that, I suppose. And I think that's more than enough, frankly. 323 on SPY. These are your over-unders, guys. 83 HYG. This makes sense, right? Equals bull. You can't not be bullish with these two conditions. So as long as the SPY holds 323.5, HYG holds 83, you have to stay bullish. The places that I still like to focus on are basically the things that have been working. So I think it goes right back to biotech. Anything biotech, I mean, you really can throw a dart. Biotech, if you want the easy play on biotech, it's IBB. And then I showed you a couple of other ones. And a cloud. So anything in the cloud space. So let's look down here. I really like this one, SWKS. I don't know if Nuon counts as cloud, but we bought some of this today. Docu, we bought some on Friday. We sold some today, kept some for later, but that counts as well. Um, Okta, Now, Z, and then Microsoft for earnings. Also, keep an eye on this one, EXAS. This one's a nice little biotech play. I think it gets to 105. I've been pushing this one in the room for at least a week. We actually sold ours today, so full disclosure on that. We did sell ours today, but that's only in anticipation of a pullback. We actually did sell the high today in anticipation of a pullback and then buy it back. So my favorite sectors continue to be biotech, cloud, emerging markets, so Chinese stocks, anything emerging markets, short the dollar, and anything in the tech space, I think continues to work. So just remember these two levels. I think this is easy enough for anyone to remember. This should keep you safe. As long as the market is holding these two levels on these two products, you have to stay bulled up. So if you guys have any questions for me, let me know. We are on a slight delay here, so it'll probably be about 10 seconds or so before I see your question, but I'm happy to help with anything if you'd like. What moves an ETF? So an ETF, so for example, I'll use IBB. So IBB is the ETF inside of IBB, and I invite you to do this on your own. Just Google IBB components, and you'll see what's inside of it. And inside of IBB is a basket of stocks. So let's say ILMN is in there, and Vertex, VRTX, and RAGN, and there's a bunch more, right? And so the ETF, in this case for biotech, which is IBB, is moving based on the movement of the things inside of it. So think of it like a basket of biotech. So instead of saying, so for example, with biotech, I own this, right? Now tomorrow it could come out that ILMN is, it kills puppies, and it's down 50%, because that would be bad. However, and I would have to eat that because I'm long ILMN. But if you have it as a basket, well, it's just one piece of your basket, right? So it wouldn't really affect you as much. So the question that you have to ask yourself with ETFs is, do you want to go with the specific stock that's in the ETF, whatever it is, or do you want to just say I want to buy the whole thing? So one more way to think about it with ETFs, when you go to Vegas and you go to play roulette, and you could either pick a number, you could put like 7 black or whatever, 10 red, or whatever the number is, or if it's 10 black, 7 red, whatever it is. You could pick just one number, right, in Vegas with roulette, or you could put it on, between 1 to 16 or whatever the number is, right? And so in that instance, you would win if it goes between 1 and 16. It's just a way to hedge your bets. So the ETFs works the same way. Looks like a lot of you got the answer on 323. Just I was a little bit behind. So Carlton, with all the bullish momentum, are we worried about the put call ratio? Well, let's take a look at it. Are all of you guys familiar with the put call ratio? So here's the thing with the put call ratio. You have a good mind to bring it up, um, and frankly, it is going to matter at some point. So this is what it looks like to me on the put call. And basically, the idea here for anyone who's unfamiliar with put call ratio, as this number goes down, right, and really just kind of follow the blue line here because it's a choppy mess. So just kind of smooth it out. Just follow this blue line, and you can see that the number is falling, right, the average. As this number is going lower and lower, this is telling you that more people are buying calls than puts. And as it stays this low, It basically means that everyone owns calls and very few people own puts. Can you see why that would be a problem right off the bat? Right? Why would that be a problem? Well, it's a problem because if everybody owns calls, who's left to buy? Right? Think of it like anything that gets off balance, right? You have you can see me, I guess. I can do this, and it makes sense. Think about it like a scale, right? There's right now it's like this. The call side is way up, the put side is way down, or actually it should be like this because there's more weight on the calls. And so things like to be balanced, right? In markets and in life, for that matter, they like to be balanced. And right now, it's imbalanced. So basically, Carlton's question here about am I worried about the put call ratio? If I were to reword that question, what I think he's asking is, am I worried about the imbalance of bullishness relative to bearishness, right? Because right now, this is telling you pretty obviously and pretty loudly that the entire market is long. And when the entire market is long, it's a really good reason to sell off, right? Because if everybody owns stock and calls, who's left to buy? And that's when you drop. Am I concerned about it? It's something to be aware of, very much so. But you could have said the same thing anywhere back here, right? It's been low for a very long time. So it's not something that's top of my mind, nor do I think it's a good timing signal. So I don't know whether this is going to bottom out at here or here or here. You see what I'm saying? So I can't tell. So what I use instead is actually a better signal. So the two things that I've been stressing to you guys are actually the one thing that I stressed, and the other thing I stress in the room is HYG, which is the credit markets, right? So just 83 HYG. Could not make that more simple. So 83 on HYG. Above that level, no concerns. I don't care what the put call ratio is. It could be zero. As long as HYG is above 83, no concerns. As long as the VIX, the VIX, keeps dropping below the 200-day simple moving average, I don't care about anything. And I know that sounds flippant, but it's true. HYG above 83, VIX below its 200-day. Those are my timing signals. If anything's going to blow up, it's going to show up there well before it shows up in the put call. What stocks are in the Fang Index? So all the ones you listed there, all the ones that you know about, and then I also added Tesla. I added Boeing because I needed an industrial. Um, what else is in there? Apple, Amazon, Boeing, Baba, Facebook, Google, Microsoft, Netflix, Tesla, and Nvidia is what's in my index. And it's cool because it moves before anything else, right? If you've been in the room or if you took my class, you've seen that happen live. So that's pretty cool. Joy, I thought individual stocks affect the ETF. Yes, it's a combination, right? So the individual stocks move the ETF, but then people buying the ETF moves the individual stocks. So it's this whole relationship between what's inside the ETF and then people buying the ETF, right? Because if I go out and I buy IBB, just the ETF itself, well, guess what happens? The ETF then goes out and buys all the subcomponents of the ETF. So if you push hard enough on IBB, you push everything up. And frankly, if you push everything up, then you push up IBB. So it's a virtuous thing. Make sure you're understanding, Clint. 21 EMA is the entry. Typically, yes. For most things, for most of the things that I trade, yes. Did I cover home builders? No, I didn't cover home builders this week. Home builders are on my watch list, so you'll see over here. I still like them, right? They're right there. Misspelled, but they're right there. So on that one, I just keep it simple. Home Depot, ITB, and that's pretty much it. I think Home Depot is the safest play on home builders. How do I decide entry and out levels? I use momentum. I use all my momentum signals. So, for example, I'll just give you an example here on SPY. Um, if it ever loads. So, for example, with my momentum signals, I would have to see. You see how the yellow line's above the red there, and then both lines are above the middle. That's my momentum. That's my momentum signal. So right now, I would have nothing to be concerned about because the yellow's above the red, both are above the middle. The squeeze is increasing. You have trend. You're breaking levels. You have squeezes here. So just when something changes, that's a really broad question, so it's difficult to answer with any immediacy, but just watch for the momentum to run out, basically. So, for example, just with SPY here, you can tell that the daily momentum is still relatively fresh. So I wouldn't be a seller here. To get a macro picture, what sectors do I look at on a daily and weekly basis? Good question. So I have my checklist here. Basically, this is my checklist. I have two of them. So the main thing that I look at is the indexes. So something like the SPY, the QQQ, and then I really follow HYG, SOX, SOX, and then I really keep a close eye on volatility, which is VIX. And I could give you more stuff, but just those couple things are really key to keeping you on the right side. So, for example, if you look at VIX, if you could make a case for VIX going higher here, one, I'd like to hear it. Two, if you cannot make a case for VIX going higher, you have to be a buyer of stocks. Same thing with HYG, right? And these are things that I don't even really trade. Like I'm not trading VIX directly. I'm trading VIX as well. That's more complicated than it needs to be, but I'm not trading VIX directly. I'm not trading HYG directly, but I'm in things that benefit from these really big levers moving, right? Because keep in mind, the credit markets, if HYG goes below 83, you don't want to own anything. Promise you that. I don't care if it's Amazon. I don't care what it is. HYG below 83, I promise you, you won't like the market. VIX above the 200 with a positive momentum structure, you won't like the market. So if I could just give you two things to look at, maybe three, it would be HYG and credit in general, um, VIX, and SOX, the semiconductors, tend to give a good read. Am I planning on holding AMD through earnings? No, I don't think so. That might be a mistake. It might be the right idea to do so, but I think I'm going to be out before then. Intel has earnings this week, so I'll be holding them through their earnings, and then I'll sell before AMD's earnings. When I go long on Microsoft, I actually just got out of Microsoft today. So I bought Microsoft last Thursday when it was like at 202, 201. I did that in the training room, and I actually sold it today. So would I go long? Yes, but they have earnings coming up, so it makes it a little bit tricky. If you're not prepared to play earnings, I wouldn't do it. If you like to play earnings, and that doesn't apply to most people are not good at earnings. But if you are good at earnings, I think you can play it long. On all the semis, do I still think it's okay to enter long tomorrow? I would like to see a pullback first. We had a really big day today. Today was kind of the day that you get paid from last week. So we did a lot on Friday, more than I would have expected. We got paid today. I still think they go higher, but just from a good risk reward, you do want to get in at a better level. So, for example, like with I don't know, I'll give you LRCX, even though this one's already breaking out. You see how LRCX here is 3 ATR up? Just it makes it unattractive to get in here, right? Because you can see your 3 ATR. You see this dotted line? You see how it doesn't get above that dotted line? Right? So if you're buying close to the dotted line, you're buying with your face next to the wall. So ideally, just remember to try to get in at the 8 EMA because this is an aggressive, impulsive trend. So if it was less aggressive, the 21. Since this one's aggressive, the 8. But when you're this close to your 3 ATR, you have this much room to go. You see that little bit of room before it hits it? It's not a good risk reward. Just be patient and wait for the 8. HYG is only getting above 83 4 days ago. I think so. That sounds right. It's it's not a magic level or anything, but let me just show you why that is. Basically, HYG just needs to hold trend here, right? So the reason I chose 83 here is because it's kind of like the pullback floor. So, for example, where do I want to buy this stock? Between the 8 and the 21, right? That's your support zone. So do you see where that comes in? 83. Where's your previous high on this small pattern? 83, right? So you see how all these things line up at 83? Below that level, I have no interest in this. And frankly, below that level, I would be short the market. I don't think it's going to go below that level again because it looks like it's breaking the 200 to the upside with a squeeze. But yeah, that's why 83 is so important. Below 83, it's just not worth it. Where can you take my class? I think it's still available on Simpler Trading /money. So if you're interested in the class or the indicators, which are part of the class, www.simplertrading.com /money should be the class if you're interested. Oh, it looks like somebody helped you out. Sweet. So no calls on Microsoft then. Well, let's take a quick look. And it looks like that might be one of the last questions here. So here's the thing on Microsoft. Do I like the pattern? Yes. Was I happy that I bought it last week when it was less up? Also, yes. So, you do want to be, you see how it pulled back to the 21 back here? That's really where you want to be buying. You really do have to trust things and just that's where you want to buy, not necessarily up here. Now, here's the thing. You see this phone icon here? This tells you have earnings coming up. When are their earnings? Wednesday after the bell. So, can you get a 2-day pop into earnings? Yeah, for sure. Can this be 216 going into earnings? Yeah, absolutely. Do you see over here how you have what I call smiles? So I call these smiles. You see how they look like smiles? If you draw in the structure, and you see how you're getting smiles on almost everything. So short term, I like it higher still, but I wouldn't know what to tell you for earnings because if you're buying the calls, okay, that's fair. Then I would have to tell you to sell before earnings. If you decide to hold after earnings, that's where it becomes a coin flip. I don't know what happens after earnings, but the setup here says it goes higher. I would prefer that you didn't do calls into earnings because those tend to be losers. So I'd prefer that you did something that's, like a butterfly, a put credit spread, something like that. It just gives you more opportunities to win. Daryl wants to know my thoughts on MFA Financial and REITs. Financials are too tough there, Daryl. I don't think there's a lot of edge in them. Let me just pull up the bank index and I'll just show you. Like if you look at the BKX here, and this is the bank index, and this is what I suggest you look at if you're inclined at all for banks. You see how drastically different this looks than everything I've showed you? Everything I've shown you has had a bullish structure, bullish trend, clear signals, and then look at this thing. You see all your moving averages right here, bundled up like spaghetti noodles? That's a mess. You see your 200 falling from way up here? That's a mess. Look at your weekly over here on the far left. There's your 200, there's your 100, there's your 50, there's your 21, there's your 8. Do you see how price is below all of them? That's not good. So whether financials can work or not is kind of irrelevant because it's a mess. So I wouldn't even focus on it. The only financial that I like, and it's not even really a financial, but it's kind of a financial, is FIS, and I'll give you another one, and MasterCard. And even these still really aren't financials. So I have no interest in financials here. Only these two. Oh, you got your calls last week. Well, then I think you're all set. You should be having a good day today, then, Joy. Just be aware that with if you decide to hold your calls through earnings, um, just be aware of what that means. I won't get into the details, but they have to really beat earnings for your calls to really work out. All right, guys. Well, last call for questions. Any questions? I think we got basically the two big points down, which is a 83 on HYG, below the 200 on VIX, and 323 and a half on SPY. If you can remember three things, I've basically distilled the entire market down to 3 points. So if you can remember those 3 points, you shouldn't get hurt. It's actually a pretty easy market. Do you buy both the individual stocks and the corresponding ETF when the sector is hot? I don't usually, Tim. I don't. And usually because here's the thing. Let's say SMH is a semiconductor ETF. LRCX is something we bought today. Compare if you like both, well then you'll get to a point where you can actually just compare both of them, right? Now, if the index, if the ETF looks better than what I'm buying, then I probably have no business buying that stock. If you're ever going to buy a stock that's in an ETF and you have the option to buy the ETF, make sure the stock you're buying looks better than the ETF. Otherwise, it makes no sense. So, what I would say is if you get to a point where you have a stock and the ETF, yes, you can do both, I suppose. Or you could just figure out which one is the best one of the two and go with that. I think you took the class, so I would just say whatever one is closer to an A plus setup, that's the one to buy. And in my opinion, LRCX looks better than the index. The question there on level two, I would not, I wouldn't even, I'm not even going to entertain it. It's if you're looking at level two, you're already losing. I'll tell you that. I'm a professional trader. I never look at level two. I remember when I did. I was much much younger, and I thought I was cool. You're not going to beat that game. Level two and all that stuff is where the computers play, and I'm just going to ruin it. I'm just going to ruin this for you. You're not as fast as a computer. No insult to you, neither am I. So don't play a game that you can't win. I don't care what happens at level two. All right, guys. Well, I'll just rehash one more thing here so I don't go out on a level two conversation. Um, Bonds look good. VIX looks weak. Dollar looks weak. Emerging markets look good. The indexes look good. Momentum looks good. Aussie dollar looks good. So the things that need to look good look good. The things that need to look bad for a good setup look bad. Meaning the VIX looks bad, which is good. The dollar looks bad, which is good, etc. So be smart. We have earnings coming up this week. I really like the idea of butterflies here. Regardless of what you're playing, I think butterflies work really nicely because they give you an outsized risk to reward and they work well with volatility. So, volatility decreasing works well with a butterfly strategy. Not only that, but with the butterfly strategy, you can make multiples of what you put in. So, you could make 100%, 200% on a butterfly where you really couldn't do that on a vertical. So I like that strategy for anything that you're looking at. I don't like the idea of venturing out from where the money is going. So I got questions on retail in the room. I got questions on banks here. I don't care about any of it. Just stick to what works. And what works here and what should continue to work is cloud, biotech in a big way, healthcare, semis, emerging markets, and I still like gold as well. So that is my time, guys. Thank you very much for spending some of your Monday with me, and we'll see you for the next one. Cheers, guys.